This is Financial Standard, the definitive source of news, thought leadership and analysis for Australian wealth management professionals. Financial Standard. Take the lead.
Hello, everyone, and welcome to the Financial Standard podcast. My name is Eliza Baven, and I'm a senior journalist here at Financial Standard. On the back of Donald Trump winning the US election for a second non-consecutive time, US equities reacted positively. But that's no surprise. In fact, historically speaking, stock markets tend to perform well no matter the outcome of a US federal election. But questions remain around the outlook for equities once Trump takes the office again next year. So to give us some insight into what we might expect, I'm joined today by Fraser Allan, head of CMC Invest Alpha. Welcome, Fraser.
Hi, Eliza. Thank you so much for having me on today.
Thanks so much for joining. So, as I mentioned, US markets reacted positively to Trump's election win, although we have seen some of those stocks, the ones dubbed Trump trades, give back some of their huge price gains that they made since Trump became president-elect. So I'm wondering, are there any particular sectors or stocks that you think will enjoy long-term gains under a Trump 2.0 presidency?
Yeah, I mean, it's a great observation, right? We had markets pricing in some of the Trump trade early on prior to the result. It was quite interesting that did pull back a little bit as markets were probably a little bit unsure and maybe a little bit overzealous. I think one of the main things is that markets love clarity. We got a clear winner. We got a clean sweep with the House and the Senate. And I think that's something that will really drive markets higher again. You're right. We've taken a breather now. But I think the key sectors I've been looking at really is the financial sector, obviously with the sight of deregulation, possible incentives for US banks as well. They should continue to perform over the next 4 years. Fossil fuels, another interesting one. The stock to pick out there is Schlumberger, which is an oil field services company. So it might be really interesting to see how they go off the back of Trump's mandate to start drilling, as he's put it. Crypto, obviously really interesting as well. It's they've seen huge gains, and some of those companies like MicroStrategy, the Bitcoin development company, Coinbase, crypto exchange. If Trump does make the US the crypto capital of the world, as he's promised, then there's no reason that those shouldn't continue to head on the bull run that they've been on.
Well, yes, it's interesting that you mentioned crypto because I think we would be remiss not to talk about it. We saw Bitcoin surge to new highs after the Trump win. And then since appointing Elon Musk to the newly created Department of Government Efficiency, which conveniently has the acronym of Doge, we have now seen Dogecoin surge. So what are your thoughts on crypto? Is this area going to keep seeing gains? Is it going to keep seeing traction under Trump? Or is this just a bit of, spur of the moment? We're all excited, but we'll calm down later.
Yeah, I'd probably tend to agree with you. Look, things might reset a little bit. And, even the crypto or Bitcoin especially has been on this crazy run over the last week. There has been pretty significant pullbacks as well. I think what's really important is to consider whether promises will actually become policies. As you noted, markets tend to do well off the back of elections, but we've seen historically that they don't really drive markets in the long run. So there's a lot of volatility now with positioning, etc. But things will probably settle down until Trump actually gets in office and we start to see some of those promises, as I said, whether they become real policies or not.
Is there any, talk around how we should take the news that Elon Musk is going to have a place in Trump's office, given that he obviously runs Twitter, now X, and Tesla and SpaceX? Is this going to see a lot of impact for any of those, the Magnificent Seven stocks? Are we expecting them to do particularly well, given that Elon will have Trump's ear?
Yeah, it's an incredible piece of news, really. I think the markets are still digesting it. What does it really mean? It's really hard to predict. I think what is certainly interesting is their relationship, and there've been no secrets around that. I think what's quite the irony to it, I guess, is that people had estimated that Elon Musk contributed about $130 million to the election campaign. He obviously has very, very deep pockets, which is seen across all of his businesses, SpaceX included. It seems to be a bottomless pit of money continually being invested into these companies. And yeah, quite ironic, as I said, that he is now in charge of efficiency. So look, yeah, really hard to predict. I think the market will really closely be looking at these. Is there a conflict of interest? Again, is another question to ask. But until we see what this role really looks like and how much time he's going to spend on it, I think we'll have to wait and see what impact it has, especially on his stocks and the interest in some of those Magnificent Seven. But he is a huge believer in AI. He's been driving that mantle for a long time. So I can't see any reason why those stocks wouldn't continue to carry on the trend they have been.
I was also curious what sectors investors might consider avoiding. My mind, for example, would go to things like renewable energy or companies that, are heavy in that sector. But is that a sector that should be avoided given that Trump is drill, drill, drill? Or are there any others that you think perhaps would be best for investors to avoid over 2025?
Well, yeah, the energy transition is something that, clients have been talking about, the market's been talking about for years now, and things have really slowed down, which is quite sad to see. I was really, really following some of those solar energy stocks, Sunrun in particular. It was quite a good barometer into what the market thought was going to happen with the election result. That's taken a huge, huge hit. As you said, they rely a lot on government incentives and government funding. I don't think that's going to come through for a long time. I would probably be saying to avoid those sort of sectors until we get more clarity on what the long-term vision looks like. Other sectors, the US retailers will probably come under pressure, possibly with higher costs due to the tariffs that Trump has said he will put in. But I think it's interesting to note on the tariffs that it could be all part of a bit of a game for him, right? He's a businessman at the end of the day, and this could be part of a negotiation process. I can't see him just slapping tariffs on and countermeasures not coming through from the opposite side. And that will probably lead to those negotiations and deals being struck. And essentially, his business savviness will certainly come under a test. So, yeah, as I said, until he gets in the chair and we really see what these negotiations and policies look like, it's hard to tell. But I would say, yeah, as you've mentioned, renewable stocks, retailers are probably best avoided at this stage.
I mean, that is the thing with the Trump presidency. This is not obviously the first time that we've experienced a Trump presidency. This is the second time. Granted, things are slightly different this time around, as he has, as you mentioned previously, more control over the House and the Senate. And also because he can't run again, or at least under their laws he can't. Who knows what might change. He doesn't have the same restrictions, perhaps, that he may have been under last time. I think one of the things about a Trump presidency is that the only certainty is that you won't really get a lot of clarity. But are there any other big lessons that maybe we learned last time that investors could bring into this fresh term under Trump?
Yeah, it's interesting to look back on his initial term because you probably find of the interpretation of what people thought might happen or had actually happened isn't quite the case. Renewables actually did well during those 4 years. So, it's not necessarily over for those sectors. If I think to domestically and what a lot of our clients are still keen on, lithium, right? It's still very, very popular, despite, prices coming under huge pressure, the slowdown in the energy transition. But there's still a lot of hope and a lot of belief that these stocks will perform eventually and will come through. So other things, the incentives that he might bring in for banks, etc. There's a lot to look at, but I think we've seen these sharp moves now. Things will settle, and then the election probably will, the impact will diminish on markets, and we'll get back to other key factors, things like the inflation and interest rates, China, the geopolitical conflicts. They'll all come back to the fore and be considered more important again once the dust settles here.
Well, that was actually the perfect segue, because I was going to say, beyond the impact of another Trump presidency, what other themes do you think could be driving stocks and equity markets into 2025?
Yeah, 2024, just to have a quick look back, it's been an incredible year for markets, extremely volatile. I think the S&P 500 is at an all-time high almost 50 times this year. Our domestic market, as although it's hit all-time highs, it's lagged again significantly, with miners really dragging on China's economic slowdown, the lack of stimulus measures. So what I'll be looking at in 2025, as I mentioned, the geopolitical conflict. I can't see Trump sitting on his hands. firstly important to note our thoughts with everyone that is impacted, and there is hope that Trump will take a firmer stance, and we might see an end to some of those. Inflation and interest rates is still going to be really key. The Fed obviously cut again last week and predicted to cut again next month in December. RBA bets for cutting have been pushed out to September next year now. If we start to get this divergence between policies, it could be quite costly for our exports and miners again. And then China is really, really the big one when we look domestically. They've tried to push fiscal stimulus and the market hasn't really taken to it. Everyone is waiting for a huge monetary policy shift. And until we get that, those miners will still stay under pressure. There is a lot of hope here domestically, though, I'd say, in terms of that. China won't let it lie. They will continue to push growth, and we should see a bit of momentum coming back into our own economy with the recent tax cuts, looking to sort of stimulate consumer behaviour and hopefully drive some growth here as well.
So a lot to look forward to, hopefully, next year. Well, Fraser, thank you so much for joining us today. We really appreciate it.
Thank you very much, Eliza. It's been great to be on. Thank you.
Thanks for listening to this Financial Standard podcast. For more information, visit financialstandard.com.au. Please keep in mind that the information discussed in this podcast is general in nature and does not consider personal circumstances. Reliance should not be placed on any content without further independent financial research and advice.